Yeah, so what I was explaining about head and shoulder. So normally, after the neckline is taken out, like let me draw this again. So first we find our precision or magic support line, which is this red line area. We find it, and then we look for possible patterns like reversal pattern. Okay, so um, in a normal bullish market, let's say this pair is bearish. Okay, let's say we are in a bearish market. So what is the last high that broke structure? Let me make this one blue. This line price here is the last high that broke this low and gave us this low, which also went up small and gave us this low. So this is our range, our current range. So in this current range, mostly we would expect a retracement into premium and expect more sales, which we have a retracement into premium. So what is our target now? We should have expected price to give us um, a new low, but here we have a failure swing. Price fails to give us a new low. But failing to give us a new low doesn't mean it might not sell again or it might not continue to sell. Okay, if it had failed to give us a new low and then comes out and takes out the 78.6% towards 100%, it is at this point that we might be having feelings of the fact that this failure swing is likely a reversal. Okay, and this will be like um, kind of like a second break of structure for us, and we would expect now a pullback into discount area or zone in order to maybe 50% or here or the precision support line again, and then a bigger move to the upside. Okay, so but that's not what is happening now. Um, until that happens, that's not what is happening now. Yeah. Gabriel, do you see the screen? Do you see the screen?
Yes, I can see the screen, boss.
Perfect. Yeah, people are having network problems. Um, good. So
I can see the screen. I can see the screen.
good, perfect. So now let's work with what we have. So we have we can say that we have price from below here that gives us this left shoulder and then give a neck, and then price goes up to make a head, which is that retracement, and then gives us breaks the neckline, and we should now expect what? What should we expect now? We should expect a right shoulder. So from the neckline to the right shoulder, normally 50% or 61.8% or sometimes even 78.6%, depending on where the left shoulder is. Because if we are to go more above the right shoulder, then we are more entering into the head. So much that I might not be interested in looking for sales. Yeah, so I think we are good with the retracement that it has given, though it gave that twice. So we see we got the right shoulder somewhere here. Okay. So now where should this had come? We should have gotten price hit this trend line, and it never came. Instead, it hits here and then went up again and has come down again to here. Okay. So two things is either price is failing the head and shoulder and rather giving us another head and shoulder pattern or a bullish head and a shoulder pattern like this left sorry, oh my god, is it that price is giving us this um no, it's either we are having this here, this becomes the head rather, and we get this, and this is an early right
Mm-hmm.
sh-
That,
should.
that means inverse head and shoulder. Six.
Yes,
Uh-huh.
yes. So we having it like this. Okay, and you see where the trend line is. Okay, you see where the trend line is. So if we once we break the trend line, we can have a move to the upside. And this is the neck. Okay, this zone is the neck because the left, the left, we will use the left shoulder to monitor the neck. So with this formation, we are expected that above this trend line, if we stay bullish, and I will be more confident if we go above the our magic precision support line. If we get a close above here, I will be more sure to probably look for longs above here. Okay, and then target here. Okay, that's what I will normally look for. Do you get it? I hope you get it.
Sir, please come again. I didn't
I'm,
get it
yeah,
very
I'm
well.
saying that we are now we've broken the trend line first. Now we come down below it. We are below it. We hit it. We retest it, drop down. We are above it with an 8 hour big bullish momentum. You see the 8 hour candle. So,
Yeah.
but I will be more convinced if we go above our magic support. If we close above here, our precision support line. If we close above here, then I'll be more convinced to hold a bullish to buy. That's what I would want to do. Okay, so we can also view it from this perspective. Okay, but generally we are in a bearish market. Okay, so in this, if this is the case, then we can be expecting that um, taking out this low as a break of structure to the downside is a liquidity grab down below here. Price pushes back into the range, let's say below this low. Price quickly pushes back above or below into the range. Then this pullback was to take this liquidity also out, this low out, break of structure to the upside, and then correction. Correction that takes structural liquidity to form this head. Then this low is protected. Okay, this low is very protected. So with this formation, we can have, if we view it from this perspective also, then we have a break of structure and a correction. So let's measure the correction. Correction comes to around 88% or close to 100%, which is perfectly fine because it takes a previous low. When it took the low, did it also shift structure? Yes, it shifted structure on the red line. There is a high on the red line here, which this move shifted, took out, and then retested and moved up, stopped at the trend line, dropped back to retest. So we can view this area here also as a range. We measure price comes back straight to 78.6%. Okay, so after hitting 78.6%, now we go up and take out close above the trend line. But we pull back again to retest 78.6% again. We pull back. So let me measure that to see where it came to. Okay, that also drops to 78.6%. And we are now on 61% and on the trend line. So this is a good place for price to buy if this pattern is going to hold. I hope you understand my point. This is a good place for us to buy. That's why you need to view the market from different perspectives, and then you come by the best or appropriate risk to reward ratio or high probable setup. So this is a perfect scenario. Okay, this can be a perfect scenario for us to um, use this inverse situation of a head and a shoulder for our trade. So let's monitor to see. But if we don't go above, so for now, the I will view the buy as a second situation because originally we are bearish, and I will view the sell as the first hand situation. So I'm going to sell below this red line and I'll be buying above the red line. When I'm selling, my stop loss will just be a little bit here, above here. But when I'm buying, my stop loss will be very big. But I'll only buy above there if I get a big body close. Okay, if I get an obvious indication. If the indication is not obvious, I will not buy because we already bearish. Okay, so let's use the original head and shoulder pattern. So we have a left shoulder head, break of the neckline. Oh no, this is wrong. Left, give us a neck, head, right shoulder, which has been retested. So I am expecting price to drop to this place. I'm expecting here. Okay, so this is where I'm expecting. So this is it. This is it. This is what I'm expecting right now. So let's see. Let me draw some trend lines here. So let's see here. Okay. So if I draw the trend line here, good. We will be very likely that this will go for a bullish market. But let's see. Okay, so let's see the touches on the trend line. We have this touch, touch. Okay, so all the closest below the trend line are indications. Indication here to sell, indication here to sell, another indication to sell. We have three indications for sales. Below this, trend lines are diagonal resistance and support. So this is like the diagonal support. So we have a diagonal pattern here. Then let's see from up here to, can we frame or draw a trend line? We can. Yeah, we can draw a trend line like this. Maybe, probably. But let me just frame it from here. Okay, so we can draw a trend line from here to here. Okay. So like I said, the bullish market will hold only when we have a bigger close above here. You see where the cross, the red line, the bearish trend line, the bullish trend line, where they cross here, where they cross. If we get a bullish momentum or bullish close above there, it's going to be a bullish market. As long as price stays below this trend line and not above it, this trend line, not above it, is going to be bearish. Below this trend line, below this red line, below this second trend line, bullish trend line, they are all sells. We're going to see price falling. But at the cross, when we are the above both trend lines where they cross and the red line is going to be bullish. So we have two patterns, the inverse and then the normal one right now. So we have to just give it time. Let's see if it's going to do that or not. But what we're viewing right now is um, we have this situation where we see we get a close below here, a close below here, a close below here indications. Um, so close below correction, close below correction, close below. This is also a correction. So let's see what is going to happen. Let me go to 4 hour. This was 8 hour to see what is happening. Yeah. So any bearish engulfing that we see from below this red line coming down is going to be the entry that we are looking for. So it's risky to trade inside this box, but it will be more clearer when price comes below here. Do you guys get it? It's risky to be taking a sell or a buy inside this box. I will go for a sell, but it's risky. But if price drops engulfs to close below this trend line, then we'll be more safer. Okay. And let me see the pullback. Let me see the pullback. What percent? It's just 38%, which is totally fine. 38% totally.
Uh,
Any,
why is it
Mhm.
why is it bad to take a trade inside the box? If I may
Why
ask.
what?
Why is it bad? As in, it's not advisable to take a trade
Yes,
inside the box.
because um the pattern that is forming, okay, is confusing. At the same time, it is revealing an inverse head and shoulder to buy. At the same time, it's also giving us the normal head and shoulder for it to reverse to continue the trend. Okay, so it's giving us those two patterns at the same time. That is number one. Number two, we are, though we are below support resistance right now, we are below the support, which is to sell. Okay, but the momentum that price is moving with, okay, see the way it closed above this uh, trend line. See, you see how it closed above this trend line. The candles, the to these two 4 hour candles, the momentum is strong. Okay, so until we get a bearish engulfing that closes below this trend line, a bearish engulfing means that All this big bullish move, we get sellers overtaking, overcoming all of them. Until we get that, you cannot be safe. So you trade with what the market is giving you, not what your analysis is saying always. Your analysis has said things. That is why it just anticipations, possibilities. Okay, and I like it when we have different possibilities. Like now we have two different anticipations. It can go for a sell, it can go for a buy around where prices. Okay, so if we were above here, we took these sales already, made profit from here already. We've taken these sales and made profit. But if we were around here, I wouldn't hesitate. I wouldn't be even thinking of buys in this setup. From here, we are looking for sales from here. Okay, but and we did get ourselves back to this area. So what we have to do is to wait for the next 4 hour candle to close. If it engulfs and does not reject, we are good. If it engulfs like this and closing below this area. So though this early sell entry can be from here, though the early sell entry is perfect, exactly the area where we want to sell, but it's so risky because of the bullish momentum that is pushing price up. Do you understand now? Do you get it now?
Yes, sir.
Perfect. So if you want to buy, um the good thing is wait to buy. If price comes down to this trend line here and rejects again, and you see a bullish engulfing, then you can take a buy. But if it doesn't close above this red line, you are not still safe. If it close above this red line and goes to close above this trend line, you are perfectly safe to hold buys. Something like this. Until that happens, we will not be safe to buy. But because we are originally holding a sell bias, we will look at the market this way. So I believe that it's going to take more than just a 4 hour confirmation for this sell. So probably price might come down this 4 hour candle. How many hours do we have? It's 3 my time now. We have like it will close around 6 my time. So we have like 2 hour and yeah, 2 hour and some minute. 2 hour and some minutes, this bearish candle can engulf. Yeah, it can drop down very big. But if it doesn't, probably the next 4 hour candle might do the job. Maybe it might push up a bit here and then reject an engulfing candle will take charge and we start getting the sell from here. That will sweep this area. Maybe that is what is going to happen. I can't tell until price gives us the indication or the intention. So we want to sell from here, but we don't have an engulfing candle. One, we have rejection, but we don't have the engulfing yet. So let me see the daily time frame. Okay, so the daily time frame is showing us a big bullish candle. Though we have this bearish indication here. You see, bearish close below the red line. But the retest that is coming to the red line, we don't have a bearish daily candle yet. So we have to wait. Is one, this daily candle will close in like 2.5 hours. We have to wait for it to close. Maybe it will close and the new bearish daily bearish candle might now take off and engulf everything. And that's where we will take our trade from. Okay. So we have to wait because for 2.5 hours to take this trade. Okay. Because if we don't wait, and the next 2.5 hours, this bullish candle goes up and close big above this bearish candle, we are power. It means the bullish people are taking charge. Okay, so let me see 30 minutes what is happening. Good. So we want to look at the 30 minutes. We look at the 30 minutes to see what is happening in on 50 index. 30 minutes. Let me push this here a little bit. Yeah. So 30 minutes, we are seeing rejections around we see rejections around the red line, rejection. But do we see any big engulfing 30 minutes candle yet? It's only one. Rejection, up, reject, up, reject, up, reject. And it's only this bearish engulfing that we've seen so far. Okay, this bullish candle this is big. This is the only bearish engulfing in this consolidation. So it's very likely price might push up again, maybe to somewhere here. Okay, because it's reacting towards this bullish fair value gap also here. Yeah, so let's see. We are likely to have price move up again to the red line here. But in the next 2.5 hours, let's see if there will be rejection and another engulfing pattern around somewhere here. Okay. Because that is only what is going to give us on the 30 minutes if we keep seeing that engulfing pattern here, candlestick pattern here, that is going to help for this trade. But for me, if we come below this trend line again, I'm going to enter for sell. And if the new daily candle opens and I get a 30 minutes or 1 hour engulfing, I'm going to also enter for sells from here. So two sell entries. If I miss the one from here, I will target taking a sell from here. Here, if I get a big body close below. But if I don't get that and it's always bullish movement here, then we can change our minds and go for buys. Okay. um yeah, so we have to trade what the market is giving us because it is what is telling us that we hold, not always what we are thinking about or hoping for. What else do we have? Is there any pair? Who else is in the meeting? Okay, Eve. I think a lot of people have network problems today. Gabriel, what do you have any other pair that you like us to look at? Do you have any pair you like us to look at? So I was looking at the uh, volatility 21 21s and 51s. Where is 21s? Be good. Okay. So this pair is very interesting and it moves very fast. So that's good about it. But on this pair, So two things here on this pair is just quick things. We can get a sell from here, and we can also get a little bit below here. We can get buys that will take price up. Why am I saying that? Because if you take a trend line from this far, we've broken this area, broken here, and have broken it, tested, drop down, deep, go up above it, retest it, shift structure, correction. So somewhere here, price is likely to take off and go up. Or it can just come down, close below the trend line again, and give us a drop to the downside. So that is the first thing on this 8-hour chart. The other thing is that this is a bullish market, though this information is not all that Deriv is giving on the trading view. Um, so in a bullish market, we expect highs, lows, higher high, lower high, higher high, lower high. So we should expect a higher high somewhere. But if it fails to give us a higher high and drops to break structure, break the previous low, then we can expect a pullback and more sales. But for now, we have high, lower high, high, lower high. So we expect to have a higher high. If I want to use this trend line to, I can say that from here, we have multiple touches. One, two, moved up, come down, comes down, go up above it, drop down, go up, stays up, hit it, up. Okay, so drop to it, engulf above it, use it, up. Hmm. Comes to it, go up, break structure, gives indication, drops to it again with a bearish indication that price will be going more bearish later. But we have a bullish engulfing that goes above it. So from this zone, was a buy signal, and it gave a buy nicely. Um, Also, we can say that what else can we say about this pair? Okay, so this 8-hour. Yeah, so also we can say that if we take price from here and we are measuring, we can see good. We can see, did price test this trend line? Yes, it tested this trend line. Both trend lines are the cross, exactly at the cross here, and it has stayed around the trend line. So we will only sell if price breaks this trend line. And then If it stays above the trend line, then it's going to go keep going bullish. The other thing is that for V21S is, let's say if price wants to, let's say we want to use the last or most recent swing low up. Okay, so let's say when price took off from here, it gave us 61.8% retracement. When price took off from here to, we just got 61.8% retracement, which is perfect. Like price giving a fair discount. Price giving a fair discount. And we are now at, yeah, that's 50%. So we are this is equilibrium. So we are now at 23. Um we go to 38, drop to retest itself, hit 23, drop to retest. Yeah, so two things is either it drops to retest 50 and then go up, or it drop and keep dropping. It drops, breaks the trend line, and then keep dropping. Another thing is either price stays on the trend line and then close up, goes up to close above the 23.8% and then climbs up, go up, go up, go up, go up. So all these are possibilities that could happen. If we take from up here down to the equilibrium that it gave us and we are measuring, we are also at equilibrium. So price trade to equilibrium, down again, equilibrium again, retesting down. We are likely from here to have a retest here, and then from here, let me see. Two things, we are likely to have a retest somewhere here, move up, and go like this. We are likely to have something like this happen. Um, or we can